Hi, everybody. I'm Marlin Bohling with you. So glad you could join us here on Markets on the Move. I'm talking again with Oliver Slope of Blue Line Futures, and we're going to wrap up the trading week here on a Friday. And what a train wreck it turned out to be on the ag commodities, Oliver. Wow. Let's start on the grain side here. Nothing looked real great as we headed into the close, getting ready for the weekend here. Corn seemed to have kind of a failure, and you had a lot of weakness in that soybean trade. Wheat didn't very, very well either, for that matter. So let's pick these apart here. What seemed to have the most significance from your point of view?
Well, I think the biggest thing of significance was me just the fact that we weren't really able to get any sustainable follow through after Wednesday's reversal off the lows, Thursday's higher trade, and then yet today just really unable to capitalize on the upside. And I kind of want to pull up a few charts because I think there's some interesting points, uh, to take a look at, particularly in the corn and soybean market, which I know that we touched on earlier in the week when we last spoke. We were talking about 407 to 410 being a big resistance pocket and a little bit of an inflection point for the market. That was old support, and then the breakdown point where we really started accelerating to the downside. So that old support from 407 to 410, we backfilled that, stalled out, weren't able to get out above there. That's going to continue to be resistance going forward. Also, in today's weakness, I think you've got a lot of people paying attention to the trend of the trade on Mondays. I think we've traded lower 10 of the last 11 Mondays on kind of benign weekend weather. So, with the expectations of no major weather event popping up, you saw a seller step back in, take advantage of those higher prices against technical resistance.
That's quite a tendency. Would you say 11 out of 12 weeks or something like that?
Yeah, and seasonally we get some volatility this time of year, and we just haven't really gotten that weekend weather volatility that we're accustomed to for many years. The last 2 years, it's been borderline non-existent. So that has been the trend. And this big crop is expected to be a bin buster and a large degree of estimates. We do have that WISE report on Tuesday. The average analyst estimate for corn is right around, I think, 184.3. So pretty lofty expectations relative to where the USDA is at right now. But I'd rather get those lofty expectations out of the way early. So I think that could potentially open the door for room for disappointment. I think I would be a little bit more concerned if we were trading at these levels and people were still talking about a 181 yield. In that scenario, you have room to work that yield higher and potentially prices lower. So the fact that we're talking about record-setting yields this early on, I think could provide some opportunity down the road.
Is there any chance to maybe subtract any yield off of that crop yet this year, other than maybe an early frost?
Well, it's going to be tough telling. I know that there were some concerns over pollination issues. How isolated that is still to be determined. We're actually headed out on the Pro Farmer Crop Tour on August 18th, and we start in Ohio. We're on the Eastern Lake, so we go through Ohio, Indiana, Illinois, into Iowa, and then up to Minnesota. So it'll be nice to get some boots on the ground and kind of see, how things are looking as we roll across those states. And then also on the Pro Farmer Crop Tour, there's the Western Lake too. So it's a first big mass boots on the ground look at what this crop might be looking like. And pro farmers have done a pretty good job historically. So we'll see. But the shot clock certainly winding down on corn. Beans, on the other hand, this is still kind of a make or break time of year. So potentially we can see some weather premium keep prices afloat in that market.
So, what have your clients and farmers in general been telling you about their marketing pattern this year? Were they able to take advantage rather of the rally that we had here 2 or 3 months ago? Or do you think they're sitting on more grain right now for the new crop coming up than what they really would be happy with?
For the most part, it seems like the consensus, talking with a large number of people, both end users, producers, elevators, the farmer's pretty darn undersold. And I think that's what keeps me skeptical about upside potential from these levels. Can we get some relief rallies? Sure. And last year, if you're looking at mirroring potential years, last year we've really traded in a similar dynamic where we started drifting lower in May and never really looked back until about the back half of August, which is where we bottomed out last year. So potentially we can work higher, but again, the farmer probably being more undersold than they would like to be, I think keeps the upside a little bit limited here in the corn
Looks
market
like
in particular.
beans are back to testing support again, aren't they?
Yeah, so for the November soybean contract, that 996 will pull up the chart here to $10 level. That was old support, now resistance. We tested that a few times this week and just weren't able to chew through and get any meaningful ground above that. And I think that keeps the technical advantage in the Bears court. Downside potential, if we're not able to get back out above $10, you're potentially looking at those April lows and the December contract lows, 961 to 971. There is a little bit of trend line support that comes in near 982, which we tested and held this week. But if that gives way 982, I think that opens the door for a potential retest of the contract lows if we don't get a weather story. As I'd mentioned, this is a really important time of year for the soybean market. So if you're bullish soybeans, you really need to see a weather story start to develop here soon. Otherwise, I'm a little bit fearful that the trend could continue to be lower prices from here.
So what about on the wheat? I mean, normally it's time to be putting the new crop in right now, but the trade doesn't seem to be too concerned about it.
Yeah, the wheat market has been, down in the dumps, arguably more so than what we've seen in corn and the soybean market. We got the chart pulled up here, and as you can see, we tried to get a relief rally going yesterday, which was actually pretty impressive. But again, the lack of follow through is really what's concerning here from these oversold levels. So I'm not saying that this dead cat bounce was just a 1 or 2 day event here this week, but we still got some work to do if you're bullish this market. Fundamentally, I think that there's reason for this market to potentially see some value here and some buyers step in on the upside. So kind of want to see how we come out of the weekend, start next week's trade. If we can get out above some of those technical levels in wheat and corn for that matter, potentially we can see some additional momentum build as we inch closer to that crop tour, and maybe that starts to develop a little bit of a story as well.
Well, I kind of put it off for a little while, but I guess we better venture into that livestock trade today. That was one of the ugliest things I have seen in a long time, and I guess we've been waiting on that other shoe to drop.
Yeah, with the limit down and feeders. So I'm looking at it now. The expanded limit that we're going to have for feeder cattle come Monday morning, 1375. We're lock limit 925 lower in feeders. So it's expanded limits to start the week, 1375. And for live cattle, we have expanded limits that goes from 7.25 to 1075. So and kind of what we talked about earlier in the week, the fund positioning in this market, I don't care how bullish you are and how high you think this market is going. The fact that you have everybody on the same side of the boat is a massive, massive concern because once they start to turn, if they're already long, there's nobody there to buy it on the way down. And that's really what has us concerned in the near term going into next week's trade and really during the seasonally weak time of year through August. That's not to say that the top is in forever and we're just going to go crater from here, but I think you need to be prepared for volatility. Looking at the CME Group CVOL index, we saw volatility, peak to the highest levels of the years in live cattle and feeder cattle, which you could have probably guessed, I would assume. And we'll look at this chart. We've had just a heck of a rally. And today's pullback, I mean, we still closed positive on the week. So it was severe and sharp, still positive on the week though. I guess that's a good thing, but also a little bit concerning as well if this thing really does start to break some technical levels.
Yeah, it's going to take some massive moves just to even put a dent in that uptrend, that's for sure. And if you look at retracement patterns, I mean, they've got to be really widely spaced out, I would think.
Yeah, so we've talked about the 20-day moving average, you and I before. That's been I think a key moving average that a lot of the funds have been paying attention to, not just for the cattle complex, but for a lot of other commodities as well. So for October live cattle, that comes in near 223.75, break and close below there. And really, there's not a whole lot of support until you get towards that 50-day moving average at 216, which happens to coincide with those old highs from June. So if you're looking for a healthy retracement and a potential spot where you feel a little bit better about maybe taking a stab back at the long side, I would try to sit on your hands, keep some powder dry, see if we can't get some more follow through, shake the trees a little bit more. And that 216, 218 neighborhood will be something to keep an eye on, especially if that cash market is able to shrug off the noise in the futures market and hold firm.
If you look at the outside markets there, I see where the equities seem to have a pretty decent day on Friday, but the dollar value sank again. What does that mean?
Yeah, equities came roaring back. There wasn't a whole lot of economic data out today, so the equity market's relatively tame and mute. It seems like every morning we wake up, though, we see the S&P and Nasdaq up a quarter to a 0.5%. Eventually, I wouldn't be surprised to see that volatility pick back up. We've seen it in a lot of other markets. Obviously, the agricultural markets were flying around today. The big outside market that we had our eye on was the gold market, and I'll pull that up here. We got some news that there was going to be tariffs on gold last night, and we saw gold just rip higher. And then this afternoon, the White House released a statement that they were going to offer clarification on that. So gold tumbled back lower, trading in about a $90 range today. So tariff talk, uncertainty, that's going to continue to keep a lot of these commodity markets alive, well, and very, very interesting going forward. And I think it's a quite a good reminder too that it's important to manage your risk because these headlines are very, very unpredictable and they move the markets extremely fast.
So we'll have a weekend to digest things, then we come back in Monday. Do you think there'll be much market action ahead of the WASDE report on Tuesday?
I wouldn't be surprised to see the markets maybe consolidate a little bit for the grain markets ahead of the WASDE report, and then going past that, I think it's going to be on weather for beans, and then for the corn market, if we can continue to see some good demand, hopefully that can keep some shorts covering and some buyers stepping in. We saw that new crop export sales number this week, absolutely phenomenal. So hopefully we can get some more of that.
Be interesting to see what the fund positioning is over the weekend as well. We'll know those answers too by late here on Friday. All right, Oliver, good to visit with you again. Thanks for the update, and we'll look forward to talking with you again next week. Oliver Sloup with Blue Line Futures with us today. With that, we thank you for joining us. Appreciate that very much. Make sure you like and subscribe to these videos, and we'll catch you next week. In the meantime, hope you have a good weekend. Thank you very much.